Hey, what's going on, team? It's Ricky with TechBud Solutions. Today we're going to be talking about the top 10 stocks that our group members still see value in. I'm going to start sharing my screen so you can see exactly what it is that I'm looking at. For those that are going to be asking, what platform am I using? I am personally using the Webull trading platform. If I'm not mistaken, it is the 6th link in the description of this video. If you don't see it, just refresh your screen and you should be able to see it. This is the platform that I use. You do not have to use the same trading platform as myself. We just get that question so often that I just want to make sure that I have that covered. So I think a lot of people have a lot of questions because of last week's rally, right? One of the things that I do want to talk about is not just with earnings, but also, that interest rate hike. It all kind of got factored into the market and acted as a positive catalyst. And now the question that a lot of people have is, well, is the market going to continue to go up? One of the things that I talked about with my Learn Plan Profit group during our live session is that last week was the end of July, right? Kind of like today, July 31st. Tomorrow is August. So with that being said, there tends to be rallies sometimes anytime that we're on track or on pace to exceed and or hit a specific milestone. An example I can give you is this Friday, we were on track to have the best month since 2020 of the stock market. We've been having really bad months. So you can see that why there was a lot of buying pressure on Friday to try to hit that milestone. But now that we go into August, right? It's a new month. Is that hype, is that buying pressure still going to be there? That's the question that a lot of people have right now. If you have access to NASDAQ indexes or NASDAQ futures, you can actually see that the NASDAQ market is down right now. It's not down very much, but it's down about 0.5%, if I'm not mistaken, at least the last time that I was able to check. So with that being said, if the NASDAQ market opens at those same levels, we'll most likely be a little bit in the red. One of the things that we want to remind you is even with a stock like, Tesla had an amazing performing week. I think it gapped up about 30%, 30 to 40% almost. Here we go. So we're at around 35% based off of overall lows at the lows of 650, which we were actually at, maybe 2 weeks ago. And now we're trading at nearly $900 a share. With that being said, again, just like the last rally that we had, it wouldn't be much of a surprise if we pull back a little bit, retesting our previous support range and seeing if we can actually indicate signs of this upward staircase pattern. Pullbacks should not scare you, right? You need to understand that if you intend to invest or trade in the stock market often, pullbacks happen all the time. They shouldn't scare you for your long-term plays, and they definitely shouldn't scare you for your day trades, right? It just means that you need to be selective with the days you choose to aggressively trade in. So just wanted to make sure that you guys had an understanding leading up to this overall up-and-coming week. We do have some big tech stocks reporting earnings. We have like AMD reporting earnings. We have eBay reporting earnings. And we can go down the list. I think Starbucks reports earnings as well. Under Armour reports earnings. So not as big as we did last week, but we definitely have a few that are set to report earnings this upcoming week. So just make sure that you guys are all aware of that. And I wanted to make sure that I can break down any stock that you see value in. So if there's a specific stock that you would like me to break down, please just make sure that you share it in the live chat, and I would be more than happy to give my 2 cents on that. So here we go. So Starbucks will have a very low earnings guaranteed. Let's go ahead and actually start with SBUX. How about that? So Starbucks, we have Carvana. Let's go ahead and break that down. So one of the things that I don't like to do is, I don't personally like to try to obviously predict or trade earnings very aggressively. If my intention is to invest long-term, then, I just make sure that my position size can tolerate the worst case scenario. I always take that into consideration. Starbucks very oversold based off of recent patterns. It's actually trading a lot better. It could be just based off of overall market direction now beginning to change. We're making lower lows and lower highs below the EMA line on that day chart, and now we're beginning to indicate some signs of an uptrend. But again, friendly reminder, any poor earnings or any bad guidance can cause the stock to dip just as much as it can cause it to skyrocket. So make sure that if you choose to want to hold Starbucks, that you remind yourself that regardless of what happens in earnings, it hopefully shouldn't discourage you to continue to hold that position as long as your position size is something that can tolerate even the worst case scenario. So based off of Starbucks' current setup right now at the current price point, based off of previous highs, it offers about a 50% return in a perfect trade. Again, one of the things that we love to remind ourselves is that there's no such thing as a perfect trader and or a perfect investor. We all have goals. Goals are something to work towards. You will never hit it every single time. So please make sure that you always factor in some margin for error. So let's go ahead and move on to the next one. Let's go ahead and break down Nvidia. So Nvidia, we have this thing setting up. So Nvidia is actually also trading a lot better. It looks like the overall market's now finally beginning to show some signs of remorse, right? Some signs of a support based off of how much it sold off, and because of last week's performance of now a lot of them are beginning to trade above the moving average and or the EMA line on that day chart. We can still see that. Again, we're still trading below the moving average here, but it's now at least above the EMA line. My biggest question is, especially if this has up and coming earnings, which I don't believe it does, if this thing, when it pulls on back, as long as it doesn't go as low as it did before, we just want to show strong buying pressure and or just an established support level. The worst thing that we want to see is it finally begins to show signs of an uptrend, and then all of a sudden it sells off and it goes as low as it did before. At that point, it shows that selling pressure is still high, and that again right now maybe just isn't the best time to be too heavy in a position in something that's still selling off. Let's go ahead and move on to the next one. So let's go to Alibaba. I know Alibaba does have up and coming earnings, if I'm not mistaken. I think it has up and coming earnings on Wednesday or on Thursday of this upcoming week. So let's go ahead and double check. So we have it on the 4th of August. With that being said, Alibaba, one of the articles that I read, and it's why there was so much selling pressure on Friday, is that they're under investigation for potentially getting delisted because of how aggressive it's been selling off, and just due to all the controversy that it has with it being under so much scrutiny in China. So it got that delisting notice. It was previously trading at $319. One of the things that I always love to remind our beginner traders and beginner investors, especially right now due to the market being so uncertain with really high inflation and really high interest rates, the cheap can always get cheaper. Anytime that you think that, oh no, this is the bottom, anytime that you find yourself selling yourself the idea that, no, this is definitely the bottom of something, you're almost just trying to hope that the market doesn't sell off anymore. And with that being said, as we can see, I think Alibaba is a perfect example where the cheap can always get cheaper. Netflix is another great example. Snapchat is another great example where the stocks just continue and continue to sell off. So instead of trying to predict the bottom of something, again, one of the things that we always like to remind our beginner traders is set an alert and really allow that opportunity to begin to present itself. So if this thing were to trade above the moving average, then maybe at that point I can revisit Alibaba and ask myself, is this actually something that is showing strong buying pressure? Is it actually beginning to indicate signs of an uptrend? And is it not just myself selling myself the idea that, oh, this thing has to recover or it has high return potential, right? And I think the more that you ever catch yourself selling yourself the idea of how much a stock has to recover, the more trouble you begin to put yourself in. I don't know if you guys have ever done that, but I know I've done that many, many times when I was first getting started, where a stock sells off, you buy it with your entire account, and you're like, no, this thing has to recover. And then guess what happens? It just continues to sell off, continues to sell off, continues to sell off. And it's one of the worst feelings. First, because of your position size. If you buy it with all of your account, then you have no more to buy more, at lower levels if you wanted to. And by not having that option, you feel like you have no options, therefore you're discouraged. And then on top of that, all you're hoping for is for that stock to recover back to previous price points of maybe where you bought it at. And again, like just to keep it very simple, that's not a position anyone wants to be in. So how do you not be in that? Stop trying to predict the bottom of something and just allow that opportunity to present itself. So let's go ahead and move on to the next one. So we have a couple other people joining us right now. Again, if it's not too much to ask, I know that it might get a little frustrating, but if you guys are enjoying this live stream, I hope that you can consider maybe dropping a thumbs up on this video and maybe subscribing as well. All right, let's go ahead and let's go ahead and break down Walmart. So Walmart, let me just double check. Yeah, so Walmart had a pretty aggressive sell-off, is now beginning to show signs of strong recovery. I think Walmart as a long-term play makes perfect sense. They did forecast some logistic issues and or troubles that are to come in the up and coming future. But based off of just how cheap Walmart is and how it's now beginning to indicate signs of a recovery, my biggest thing with this is that, put yourself in a position that your future self can thank you for, right? Walmart's not a penny stock. It's not a pump and dump. It's, one of the largest employers in the world, right? And with that being said, it offers decent recovery potential based off of where it's at and based off of previous highs. It's not anything crazy, but I think if that, you control your position size, if you're good at averaging up and you really believe in, Walmart being something that will eventually recover, I can see Walmart to be a long-term play. It doesn't need to recover in a couple of weeks. It might take a couple of months. It might take a year, right? Because like we all know, right? Just because last week was a strong week for the market, 1 week does not define a market recovery. So with that being said, I always like to remind our beginner traders to ask themselves a simple question only you can answer. Anytime that you're about to take a position and you decide on the number that you're going to invest in, right? So the dollar amount, I always tell them to ask themselves, can you tolerate the time that it will take for this stock to recover? Because we all know most of these good quality companies will eventually recover. If it's not in a couple of months, maybe in a couple of years, but they will eventually recover to previous highs. But will you have or give yourself enough time for the market to recover? Because sometimes if you go in too aggressive, you just begin to discourage yourself, right? So yeah, and a lot of people, like Eddie is saying, are talking about a bull trap, meaning that the market's going up for a short period of time, like we said, about 2 to 3 days, and then it pulls right on back. I'm not here to spread conspiracies. I'm not here to spread rumors. I'm just saying tread lightly. If you intend to invest in something for a long period of time, I really don't think that it matters, right? Especially if you have a well-balanced position size. All right, let's go ahead and break down AMD. I think AMD would be a great one to break down based off of, it's going to be reporting earnings, if I'm not mistaken, on Wednesday. So on the 2nd, that's actually Tuesday. That's going to be Tuesday of this upcoming week. AMD, very similar to Nvidia. It's one of the market leaders in micro devices and making those chips, right? We can see the lower highs, lower lows as a very strong descending pattern. Is AMD showing very strong signs of a recovery? No, not necessarily. Is it something that I wouldn't mind investing in long term? In my opinion, from what I know about AMD, yes, I would view it as more of a long-term play and less of something that I would want to day trade and or even short-term swing trade. AMD has been selling off since really the end of 2021 and has been making, do you guys see this? Lower highs and lower lows. It has this consistent descending pattern, meaning that it continues and continues to sell off. So again, instead of trying to predict the bottom of something, just allow the opportunity to present itself. AMD is cheap at $70 and it's cheap at $100 based off of previous highs. If you remove the idea of trying to be a perfect investor or perfect trader and simply remind yourself to create an effective watch list and buy when it makes sense, then I think that that's what should be most important. As of right now, I would just be very careful as we go into this first week of August and see if that buying pressure continues. If the buying pressure continues from last week, then I think that I'll have a little bit more confidence to invest more money in my long-term plays. But if early next week we begin to see that some of these stocks begin to pull on back, then it just shows how weak that buying pressure was and that it was only hyped up because of earnings and because we were on pace for the best month of 2020. Nonetheless, There was great buying pressure, and that's still a step in the right direction. But just please make sure that you take your position size into consideration. All right, so it looks like we're about halfway there. So again, if you want me to break down your stock, please just make sure that you share it in the live chat and you drop a thumbs up on this video. So look at Bros. Yeah, so that's Dutch Bros, right? Let's see how that one's trading. So Dutch Bros is relatively a newer stock, right? They recently IPO'd, if I'm not mistaken, last year. They hit highs of $81 during their hype. They hit lows of $80. In my opinion, Dutch Bros is kind of like a coin flip right now. If you really believe in the company and what it's set to do, then great. Maybe it could be a good long-term play. But based off of how it's trading sideways, it's been super, super choppy. One of the things that kind of throws a red flag with me on that is there's a lot of uncertainty, right? All that volatility just is flashing, how risky this could be. It has no proven track record. It's new to the stock market. So with this, I mean, it's a high risk, high reward type of play. Based off of where we're at right now in previous highs, that's about 117% return. More realistically, I would say that, $60 tends to be more realistic. That's still a 70% return. But based off of recent patterns, we've been even struggling to trade above $40. So I'm all about stepping stones. And I think that as long as this thing begins to show signs of a recovery, then yeah, I would love to follow up with Bros and see if this is something that actually begins to show signs of growth and not just continuously throughout 2022 sell off, kind of like everything else, right? And if I'm trying to compare Bros versus everything else, I'm probably going to pick something else that has a better track record prior to 2022. So Shopify, if I'm not mistaken, Shopify ended up selling off, right? Even after they reported earnings. So we can look at this on the four-hour chart. They just did a stock split. So went from highs of 176, now trading at around $34 a share. It's hard to say with these. I love Shopify as a company and what it stands for and what it's doing. Removing my emotions aside and my opinion aside, it's been a pretty shitty stock. I mean, there's no other way to put it. It's been selling off. It's been making lower lows, lower highs. It's been continuously and aggressively losing value. That's the only way to put it. From where we're at right now to previous highs, about a 400% return. If you think that coin flip is worth it for you because of the high risk, high reward, that's on you. You're an adult. Like I said, I'm never here to tell you what to invest in or to what to trade. In my opinion, there's so much recovery potential. I don't think it needs to be that kind of coin flip. I think that if it does begin to show signs of a recovery, set alerts. Set alerts, follow up with it on a consistent basis, be disciplined, and if it does begin to recover, then guess what? You can revisit this, ask yourself, now is it time to work? Is it worth investing in? And then you can always revisit that idea and then, average up into your position when direction is in your favor. There's so much margin for potential profit. I don't think you need to be so aggressive with something that has nearly a 400% return based off of all-time highs. That's just my opinion. I would rather play it safe and be a little bit more on the conservative side than just coin flip it and say YOLO and just step on the gas, right? But again, you guys can let me know down in the comment section. I also don't. You guys will learn if you're a little bit newer to my channel. I have a specific way that I trade, but I will never overwhelm you with my opinion on what I think that you should do with your money. I'm a big believer that there's a lot of different ways on how to approach both investing and trading in the stock market. I'm just happy to be here to kind of like be a start in your potential career investing and or trading in the market. So let's do DKNG. Let's see, DKNG. All right, here we go. DKNG has been struggling as well. So DKNG from previous highs of $74 a share. 74 now trading at sub $13. It hit lows of $9.77. I like that it's now beginning to kind of trade sideways a little bit, but this is going to be very similar to Shopify, where it's been selling off for such a long period of time and there's so much potential for recovery that I don't think that you need to be super aggressive with these plays. I think that if the market does begin to recover, you just have to do a good job following up with your watch list and setting effective alerts. And again, it really just comes down to how bad you want it. So if you really want it, if you really think that DraftKings or Shopify are stocks that you think will recover, then I think that they're worth following up with, right? But it all takes discipline. A lot of people like to ask, like, why do so many people fail in the stock market? Why do so many people fail in starting a business? Why do so many people fail in real estate? Because the barrier of entry is so low. Anyone can open up a trading account. Anyone can start trading, right? There's no discipline that is required to start. You can do it because now everything is so accessible. The same thing with starting a business. The same thing with real estate. The same thing with everything. The barrier, the level of entry is so low. But like a job, imagine if you were forced to have structure, to have rules, to have guidelines based off of the actions that you took. You might be a little bit more disciplined, maybe a little bit more selective with the stocks you would choose to invest or trade in. But unfortunately, no one can force this upon you. It has to be how bad you want it. And that's kind of what I want to leave you guys with, of that idea of asking yourself, how bad do you want it? Are you continuously making those same mistakes? Are you continuously not cutting losses? Are you continuously not managing your risk? Are you continuously not managing your position size effectively? Are you continuously not being selective with the stocks you choose to take advantage of? Only you can answer these. And if the answer is yes, it's not that you have to fix all of those problems or bad habits all at once. It takes time. But the fortunate thing about this is that you have nothing but time to get better and to make simple steps and tweaks along the way to get one step better every single time. And that's what I'm most excited about, is as the market is this cheap and as the idea of the market finally getting better, it's an exciting time to be invested in the market. Let me know what you guys think about that. All right. So ticker symbol AXP. All right. Let's go ahead and break. I think that's American Express, right? Yeah. So American Express, a little bit more on the oversold side. Here we go. So based off of previous patterns, very bullish before, kind of struggling like everything else. Had a really strong, past 2 weeks, kind of like everything else. But again, we still kind of have that continuous descending pattern. I think, again, if Amex is something that you want to invest in long term, I think it's a stock worth investing in. I think it's a stock worth following up with. My apologies. It has about a 20 to 30% ROI potential based off of previous all-time highs. I really do believe that American Express can eventually get back there. I just think that it's going to take time. My thing right now is I want to see this week and then the week after how the market begins to trade. I want to see if we continue to rally and work our way up to the moving average, or if we pull back a little bit. And if we pull back, I don't think that's a bad thing. I think as long as we don't pull back as much as we did before, then that's still a step in the right direction. That's progress. That's getting a little bit better. And that's what I'm really excited to follow up with. What's going on, Alethea? Hope that you're having a good time. So love your content. Thank you for your wisdom and beginner-friendly content. Of course, again, I feel like a lot of people make beginner-friendly content in the sense of, how to get started in the stock market. And it's always about making money, which again, I love having that focus. But I wish when I first got started that there was someone that had more of a focus in reminding you how important it is to be selective and to manage your risk. Because those are the two things that are not glorious. Who wants to be reminded as the person that encouraged you to manage risk or to be selective? That's kind of boring. But I think it's those areas that people lack talking about most that need to be rehearsed or practiced the most, especially with current market conditions. And I would love to be that reminder for you if you give me the chance, right? Reminding you that even when things look like they're too good to be true, to kind of bring you back to earth and remind yourself that, hey, we've been selling off for 7 months. One green week does not define a market recovery. Not that you shouldn't think that the market's going to recover, but that you shouldn't get too in your head that the market can't pull back. That's what I mean by that. So top G things, right? Let's see if anyone knows what I mean by that in the live chat. So, all right, let's go ahead and let's do SoFi. So I'll break it down for you. All right. SoFi, very similar to almost everything else, right? SoFi has been selling off for quite some time. We can see that it's been trading sideways right around $6 a share. I would be very careful with this, especially if it continues to trade below $5 a share. At that point, it can potentially get delisted from the stock market. So with that being said, I think that there's so much recovery potential. You don't need to be very risky with this. Set your alerts. Follow up with it when it begins to make sense. Until then, let the sucker bleed. Let it sell off. The cheap can get cheaper. Set those alerts, and once the market finally begins to show signs of recovery, then you can step on the gas. Until then, let the thing bleed, because at this point, this thing can get delisted. If it continues to trade below $5 a share, I do not think that that's not a good sign for this stock. At that point, it's at very high risk to get delisted. So okay, so in SoFi, but have a stop loss just in case. I think it's too early to tell. It's trading sideways, which, yeah, I guess that is progress based off of how aggressive it's been selling off. I just think that you need to be very, very careful. With everything that we've talked about of how much opportunity there is out there, I just don't think that SoFi has shown the strongest signs of market recovery. So let me go ahead and see if I can break down. Let me break down one more stock. What are we at right now? So we broke down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's do 11. Lucky number 11. Again, if you want me to break down your stock, just please make sure you drop a thumbs up if that's not too much to ask. So here we go. All right. Oh, you guys are going quick with it in the live chat. Nice. All right, I'll actually do two. I saw two that I like. So SOXS, that's the triple leverage ETF, right? The reason I want to talk about it is based off of recent patterns. It's been continuously selling off. I don't think that this one's going to be a good one. There's an inverse ETF. Feel free to share it in the live chat. I think direction is super important when trading inverse ETFs, and right now direction is not in your favor, so I'd be very careful with that. The other one that I saw is Trade Desk. So if we look at this on the day chart, aggressively selling off, but it's very oversold. It looks like it's beginning to trade sideways, and it has a lot of recovery potential. This is, I think, a good stock to watch. I'm not sold on the idea that this is a good stock to buy right now, as it's not indicating signs of recovery. If you're part of my Learn Plan Profit group, one of the things that I always talk about is the 3 stages of a reversal. Ask yourself a simple question. Are you missing out by not being invested right now? No. It's still selling off, lower highs, lower lows. It just doesn't make sense to buy right now. So with that being said, it's very easy for me to say that I'm okay with not being a part of it right now. I can set my alert just like I have right here. And if this thing begins to trade above that, I can get alerted, revisit it, and then ask myself that same question. Am I missing out by not being invested? And then if the answer is yes, I can ease into my position. I don't need to buy all of the shares that I possibly can. I can go in with 10% of my position. Then I can go in with 20%, then 30, then 40, then 50. I can ease into something knowing that I don't have to be perfect. I feel like so many beginner traders are always trying to make the most money, going in super aggressive, and they forget to remind themselves that, again, making money is part of the stock market, right? But managing your risk and your downside is so much more important, because you can make a ton of money, but it only takes one bad trade to wipe it all out. And you need to be reminded the importance of risk management. So I'm very excited to follow up. So one of the things that we do want to remind you is, again, tomorrow at Market Open, I'm going to be trading live with our Learn Plan Profit group. You definitely do not have to. But if you've been waiting for a discount for our Learn Plan Profit 2.0, I trade live with them every single day, Monday through Friday. When the market opens, I am live with them. You get access to the A to Z video lesson library. You get access to our daily live trading session and every previous live trading session that we've hosted. You also get access to our private group chat, and you get access to the one and only TechBuds HQ. It's a 7,000 square foot facility that I bought in Chandler, Arizona, and all of our Learn Plan Profit members have access to all of this. It's a one-time payment, lifetime access, and right now it's $100 off, and it's the second link in the description of this video if you want to join my team and watch me trade live as soon as tomorrow. If you have any questions that you want to ask me before you even decide to sign up, and or if you have any questions that you want to ask me even before you get started in the stock market, the first link in the description of this video is my Discord. It's free. You can feel free to send me a direct message there. I take about 24 hours to respond. I just have a lot of messages to catch up on, especially over the weekend. And again, I would be more than happy to answer any questions you might have about getting started in the stock market. And the last thing that we want to remind you is a lot of you guys have been asking about our TechBud staycation. It ends in just 7 days. August 7th, we are flying out. It ends on August 7th. So for those that want to know the details, it's a 3-day event. So we're flying out 3 winners this time. So there's going to be 3 people that win. Day 1, day 2, day 3. It's an all expenses paid trip. We're going to have you at one of our Airbnbs here in Arizona. You're going to be hanging out with me and the team at the TechBuds HQ for those 3 days. And these are the different activities that we have planned. How do you enter? It's super easy. At shoptechbuds.com, for every $1 you spend, it equals 5 automatic entries. So an example can be if you've wanted a trading mouse pad, if you were to pick up this cash only one, that trading mouse pad would earn you 150 automatic entries towards the giveaway. And again, that's at shoptechbuds.com or the 4th link in the description of this video. Reminder, this is if you've already wanted to buy flags, if you've already wanted to buy mouse pads. If you didn't want to buy anything and that's the only reason you're going to buy something, in my honest opinion, just don't buy anything, right? But if you wanted a nice mouse pad, if you wanted some flags, some art, we have some Wall Street merch. Again, it's all available and you will automatically get entered towards the giveaway. You don't have to do anything. You automatically get entered. And when you purchase something, it shows you how many points you automatically earned towards the giveaway. So we are talking about that when it comes down to, a lot of people are asking, can we ride in the different supercars? And of course, I'm going to be picking you guys up at the airport. Again, if you guys want to learn a little bit more about the details of the TechBud staycation, then I just encourage you, take 2 minutes, head on over to shoptechbuds.com, click on this banner, and it breaks down everything that's included with all the activities that we have planned. Again, it ends August 7th, but the giveaway or the staycation's actually from August 23rd to August 25th. So you just have to make sure that on those 3 days, you're available to fly out to Arizona, which we'll pay for, and then we fly you back on the 25th. So I really do appreciate you guys' time. I hope that I earned your thumbs up in this video. Again, if you're part of my Learn Plan Profit group, make sure that you set your alarms for market open. We will be trading live. And other than that, like always, let's make sure that we end the year